lo and behold, that was the low so far that occurred Monday morning. The following, it was a day and a half collapse, really. It was the last day of last month and then the first day of this month. But we got to certain levels on silver and gold, which made sort of sense. Oh, they pulled back to there. Oh, that makes sense. Yes, it was dramatic to get there. Since then, we've gelled. We've had up and down action. And frankly, where the rally peaked so far this week, up above $90 in silver, made some sense too. And then we pull back from there. So we've more or less set a structure, so to speak. One, we held a key long-term support level, actually an intermediate term support level, 3-month average on silver to the penny. Okay, we hit that on Monday. And we came back and retested today. If you take it out a little bit, it doesn't bother us. But that was an interesting area to stop at because we have not seen that rising moving average, a 3-month average, which is not a common tool. We use it.
What's going on, everyone? Welcome back to the channel. Today we're diving into something that honestly has me fired up. Michael Oliver, the technical analyst who predicted the 1987 crash and nailed silver's triple-digit breakout, just dropped a forecast that's either going to make people very wealthy or look absolutely wild in hindsight. He's calling for silver to hit anywhere from $300 to $500 an ounce by this summer. Not years from now, but in the next few months. And he's backing it up with momentum analysis that's been deadly accurate for decades. This is one you're definitely going to want to stick around for because the breakdown gets intense, especially when he talks about what's happening in the bond market and why old trading metrics are about to get completely shattered. Drop a comment below and let me know where you're watching from. I love seeing where everyone in the community is tuning in from. All right, let's get into it.
Joining us today, the legendary technical analyst and founder of Momentum Structural Analysis, Michael Oliver, the man who called the 1987 crash, nailed silver's breakout to triple digits, and now sees silver rocketing into an entirely new reality. He's uber bullish, silver potentially hitting $300 to $500 an ounce by summer, driven by massive structural momentum shifts, bond market cracks, and a historic rotation out of paper assets. And yes, he called that jiggle in the middle correction that we saw, but a much higher level, shaking out the weak hands before the real fireworks begin. We're gonna get to the bottom of what's happening in gold and silver today, if it's the last thing I do. Michael Oliver, welcome. Let's get right into it. How are you doing?
I'm doing fine, Daniela.
I was saying offline to you how I was at the Vancouver conference focused on gold and silver. Everyone was so happy and there was such excitement in the room, but I knew in the depths of my soul, I could feel it coming. And I didn't want to burst anyone's bubble,
No.
but I knew that smackdown in gold and silver was going to hit. It hit. And I kept thinking about you and jiggle in the middle. Is it just a jiggle or going to be something much bigger here?
It came sooner than we expected. We have various reasons, I probably talked about in the last show, of why we think this move in silver. The bell rang in the close of November for us, meaning that's where the point of massive acceleration was likely to occur. So December would be month 1, January month 2. In hindsight, looking back at various markets who've undergone similar things, quite often these surges, and there's reasons for this in silver as well, are spent in a couple quarters. Either side of a couple quarters, 5 months, 7 months, something like that, where you see the massive move that it's going to make done quickly. Oh, there might be some more later, but that's not the point. The point is the massive surge, the rebirth to a new reality for silver. But we're only month 2 into it. In the last day of that month, we had a huge collapse. Came a little sooner than we expected. We kind of thought maybe late February, early March, and it was deeper than expected. But in hindsight, when I go back and I look at a lot of my momentum charts, again, you can look at price if you want, that's fine. But when you look at momentum, often you get a different picture. And that pullback made a lot of sense, actually, where it went to, both on gold and silver. And lo and behold, that was the low so far that occurred Monday morning. The following, it was a day and a half collapse, really. It was the last day of last month and then the first day of this month. But we got to certain levels on silver and gold, which made sort of sense. Oh, they pulled back to there. Oh, that makes sense. Yes, it was dramatic to get there. Since then, we've gelled. We've had up and down action. And frankly, where the rally peaked so far this week, up above $90 in silver, made some sense too. And then we pull back from there. So we've more or less set a structure, so to speak. One, we held a key long-term support level, actually an intermediate term support level, 3-month average on silver to the penny. Okay, we hit that on Monday. And we came back and retested today. If you take it out a little bit, it doesn't bother us. But that was an interesting area to stop at because we have not seen that rising moving average, a 3-month average, which is not a common tool. We use it. We've not seen that since like 8-9 months in silver. So, I mean, it hasn't even come back down and kissed that rising average.
This is the forecast that has the entire precious metals community either jumping for joy or calling it completely insane. Michael Oliver just put his reputation on the line with a $300 to $500 silver call by summer. Not 2027, not some distant future. We're talking about the next few months. And here's what most people are missing. This guy called the 1987 crash. He nailed silver's breakout to triple digits. So when he says the bell rang at the close of November for massive acceleration, you better pay attention. Because November marked a structural shift that happens maybe once or twice in a generation. Look at what happened in 1979 to 1980. Silver went from nothing to $50 in 5 months. Then, 2010 to 2011, silver doubled in a half in 7 months. These explosive moves don't take years. They happen in a couple of quarters, and then they're done. We're only 2 months into this cycle right now. And yes, we got absolutely crushed at the end of January. But Michael actually expected a jiggle in the middle. When he went back and looked at his momentum charts, that pullback made perfect sense. Silver hit the 3-month moving average to the penny. The market held exactly where it needed to hold.
I wanted to ask you, Michael, do you think there was anything nefarious behind the silver move?
Could be. I know there's something been nefarious for the last 50 years, or especially the last decade or so, to cap it again at 50. So the old reality was going to prevail. Well, it didn't. Okay, so whoever thought they could cap it with whatever instruments they used didn't work. And even now on the pullback, it's still not back to 50. Okay, so any attempt to control a market, to control reality with factors that aren't part of reality, manipulation in other words, ultimately fails because reality always wins in the end. And the longer you restrain reality from doing what it might otherwise have done, then the more compression you've built into that market. In the case of silver, catching up to a price level that would be reflective of, for example, the decay in the money unit, or reflective of what gold has done for 50 years. Meaning higher and higher highs, not capped off for 50 years. But, you know, when you look at silver and you see a 50-year range, $4 to 50, $4 to 50, and yet other markets during that same time didn't stop at the 1980 high, didn't stop at the 2011 high. Look what copper did for decades. You know, I've mentioned this before, 50 cents to $1.50 for decades and decades. When it broke through in a couple quarters, it went to $4.50. It's back in 2006. Lead did the same thing in 2007. Gold, the mama market of the monetary metals, has not restrained by the 1980 high, nor the 2011 high, where silver was. Why? It just doesn't make any sense. If copper can blast into highs above a multi-decade range, why can't silver? Well, it reeks of manipulation. The question now is, did this break occur that way? Could be. It could also be to late comers who came in, because see, our buy signals at MSA were approaching $35 last June, coming back up towards some highs it had made before, above 35. We said expects acceleration. Well, okay, $35 accelerated. Then the next signal was that November close. And that was when silver broke out versus gold. And it said, hey, I'm coming back to reality. I'm too cheap compared to you, Mama Metal. I'm going to join you. And so the little monetary metal exploded in relative value, but it's still cheap versus gold. Very cheap historically. And we think it's going to regain some of its old norms at much higher percentage levels versus gold than we've seen so far. So neither the price of silver advanced nor the relationship to gold being depressed and recovering, neither of those have reached levels that make sense to us in terms of satisfaction.
What do you make of some quite prominent people in our industry who are vocal about the fact they sold all their position in silver at around 90 and, want to get, just say, I'll get back in when it's low again?
Well,
Any opinions there?
No opinions. I think too many analysts, including those who are friendly to gold and silver, fundamentally friendly, are using old metrics. Now, they're going back and looking at their charts, 1979 to 80 and 2010 to 11, and they're seeing these massive up moves, of course, confined in that old range. And yet they looked at their metrics that they might have on their quote screen, like, let's say, RSI, for example, a very popular free tool. Okay. It gets above 80 or something on a monthly close. That's overbought. Well, old norms are going to be shattered in this move. Just like price has shattered the old 50 highs, you're going to break old norms of what is overbought.
And this is where it gets absolutely critical. For 50 years, silver has been trapped in a range from $4 to $50. Meanwhile, copper went from 50 cents to $1.50 for decades. Then when it finally broke out, it shot to $450. Gold didn't get capped at the 1980 high or the 2011 high. So why has silver been stuck? It reeks of manipulation, and Michael is not afraid to say it. But here's what changed. Silver finally broke out above 50, and even after this brutal correction, it's still holding above that level. The manipulation failed. Reality won. And when you suppress a market for that long, you build compression into that market. That's exactly what we're seeing now. But here's the part that's blowing my mind. Analysts who are supposed to be bullish are selling at $90 because their old metrics say it's overbought. Michael is arguing that old norms of what is overbought are going to be shattered. Just like price shattered the old $50 high, momentum indicators are going to blow past levels that used to signal a top. The market is saying those old reference points are done. So when people take profits based on outdated metrics, will they actually get back in? And will they get a better price than where they sold? History says probably not.
The be-all, the silver's a surfer, and he's riding on two waves. Now, right now, everybody knows about the industrial supply-demand deficit. That's been made clear to investors. And so, and the China situation. But it's money. It's also the baby of gold. 3,000 years it's been that. Don't dismiss it. And when the world gets shaken by this and that other event, like the decline in the dollar's reserve status, versus other fiats. The questionable nature of U.S. government bonds, and especially Japanese bonds or U.K. bonds. These are crises bubbling on the edge. And the monetary metals know that. And they're not going to wait for the event to happen in this category or that category. They're already building in their anticipation of those events aren't going away. It's just a matter of when do they burst.
Exactly. And I want to get back to that point. When do they burst?
Yeah.
but I just think that, just to wrap on that Shanghai chart, it just is perfect proof why precious metals are meant to be held and not flipped. And also, Michael, any thoughts on some bullion dealers currently, because of the amount of physical silver entering the market, some are telling their clients they may receive approximately $10 to $15 per ounce below the spot price.
I have no opinion on that issue. These supply-demand unique issues will pop up all along the way on the sidelines. Just like changes, for example, a lot of traders like to look at futures trading data, like commitment of traders or short positions and so forth. And all these things will come and go, and there'll be exciting points, or they might be negative points from time to time. But really, they're not part of the big process. And the big process is there's two waves that silver's on. One is the industrial one, but there's also, it's the money. That's the bigger wave underneath the monetary metals. And so silver's got, it's a double-barreled situation, whereas gold is unibarreled, okay? It's the money metal. But all these little factors that we can cite day to day that pop up as headlines or data points. Yeah, they're interesting, and some will be negative and some will be positive, but they're effectively noise in a much bigger situation.
And let's talk about that bigger situation. We can wrap here, because the last time you opened our eyes or really pointed to the dollar breakdown, the treasury bond market as major turbochargers, and pointed to that bringing us close to the real panic. And you were also waiting for the Supreme Court hearing on tariffs. And here we are, still waiting, Michael.
Well, let's look at all three. First off, the dollar.
Yeah.
The dollar is a constant piece of decay anyway. Look at M2. You can see how much supply increases every decade, like 80, 90% supply increase. Therefore, its real buying power continues to collapse decade by decade. That's true with the euro and the yen. Okay, so when you compete those pieces of fiat with each other, the technicals right now indicate, the dollar's going down. Now, right now it's struggling to hold, but it's already broken long-term momentum trends. And the price trend is also now in jeopardy, where anybody looking at a price chart going back to 2010 on the dollar index says, oops, we're below the line. Okay, that's one factor. It's not I consider that actually lesser of the fundamentals, the relative value of the US dollar versus the euro or the yen, which is what the dollar index is basically. The other one is the government bond market. We know we have a crisis building there.
The bond market situation is what's keeping me up at night. And it should be keeping you up too. Michael laid out something that most people aren't connecting to the silver story, but it's everything. The Fed has been buying bonds since November, and despite that support, bond prices are still falling. If they drop 3 to 4 more points into the 112 range, Michael's technicals are screaming that the holding pattern since the 2022 collapse is over. The market will start to puke. And if that happens, the US could suddenly start looking like Japan, a bond crisis that spirals out of control. On top of that, we've got a commodity breakout happening. Crude oil just broke out on long-term momentum. The Bloomberg Commodity Index broke out. Wheat broke out. This is a major asset class shift. And when crude oil moves from $60 to $90, that's a 50% jump in gasoline prices. The average person is already getting strangled by cost of living. Now, let's talk about Michael's gold target. JP Morgan recently came out with a forecast of 8,500 for gold. That's the exact number Michael has been saying for a couple of years. But that's not even his top target. That's just an 8-fold move from the 2015 low. Gold has only done a 5-fold move so far. So 8,500 by the end of 2026? Michael expects it, but he wouldn't call that the projected top. So what do you guys think of this? Leave your thoughts down in the comments. Please like and subscribe, and I will see you in the next video.